Well, ball games are never won in the first quarter, but they can often be lost there. And for the first half of this year's first quarter, it sure looked like the investing game for 2016 was over. Tipped off, stocks did, with their worst start to a year ever. Correction territory for the Dow and the S&P 500, almost a bear market for NASDAQ. But then, like that Texas A&M basketball team last week, a furious, miraculous comeback. Oil prices rose, recession fears receded, China settled down, and stock investors started hitting three-pointers. Well, today the first quarter ended, and you, as the coach of your portfolio, should feel relieved that the game didn't get away from you. Those big early declines for the S&P and Dow, they're gone. Those indexes are now both near their highs of the year, back in positive territory after posting their second straight quarterly win. The final day of Q1 ended quietly. The Dow Jones Industrials lost 31 points to 17,685. NASDAQ rose fractionally. The S&P 500 was off 4. As for the NASDAQ, well, it remains negative for the year, but by less than 3%. A three-pointer in the second quarter, and the NASDAQ games all even for the year. The quarter's most glittering performance, gold, best there in 30 years. Bob Pisani at the New York Stock Exchange had a front-row seat to all the action this quarter.
The quarter ended on a quiet note, but there were plenty of fireworks along the way. The S&P ended essentially flat for the quarter, but not before a roughly 10% decline from the 1st of January to mid-February on concerns about a recession. Now, that never materialized, but it gave everyone a scare. One factor driving the turnaround in stocks was a weaker dollar and large gains in oil, which boosted commodities across the board. Metals and mining stocks, for example, are up 39% this year, and gold's up 16%, its biggest quarterly gain in 30 years. But the news was not so rosy for the biotech sector. The NASDAQ Biotech ETF, a basket of biotech stocks, down 23% year to date. Many of the biggest names are seeing a slowdown in sales and earnings after years of torrid growth. So momentum investors have been getting out. Another problem for biotechs is the issue of drug pricing. High-priced drugs have drawn the ire of many groups, including Congress, and that's an issue highlighted by the whole Valiant fiasco. It's unlikely there will be wholesale government intervention in drug pricing, but with the election coming up and the possibility that drug companies could become punching bags for politicians, many investors are just sitting on the sidelines. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.